Today we're talking about real estate investment strategies. Top on my list for a strategy like this, if you want to invest in real estate profitably, is to engage a strategy called off plan. What is off plan? Off plan is basically when you purchase a real estate investment before construction or before it's completed or anywhere in between. So maybe while the construction is going on. And that's basically what off plan is. So why is this a strategy? It's a strategy for three reasons. One, cost savings. You save yourself money when you buy off plan. The prices are always cheaper than a completed project. Two, you take advantage of the flexibility of payment. Nigeria is a very cash backed or cash based society. You need cash upfront to make a lot of purchases, especially real estate. And so when you go for the off plan option, what the opportunity of flexibility of payment is on your side. That means you don't have to come up with 100% cash. You can spread your payment over the construction period. It could be monthly, it could be quarterly, it could be half yearly, depending on the tenure of the project, of course. So flexibility is also another advantage that you get when you invest in off plan or using the off plan strategy. The third one is the most important actually, which is profitability, because you're not buying real estate because you like the house. You're buying it because you want investment that brings you returns. So it's always profitable. Remember your cost savings, but then again you increase your ROI. If you buy at off plan, by the time the project is completed, your rental yield, for example, so if a property is renting for 5 million naira and it costs you 50 million at off plan, but at completion it's 80 million, do you see where the savings is? Do you see where also your profitability is? Your return on investment at 50 million is higher than the investor who bought at completion for 80 million naira when both of you are renting the same property for the same value. Another advantage on profitability is capital appreciation. When you buy at 50 million, you sell at 80, which we assumed is the completion price. That's 30 million naira margin. That is profit, pure profit, and you can make that from within 12 to 18 months in some instances. If you buy at completion, you're buying at the full value. You have to wait longer into the future for you to reap such benefits. So those are the three advantages why off plan is a great investment option. But it would not be smart for us to go without talking about due diligence, the risk. So before you consider investing in an off-plan project, you need to first of all do a very crucial due diligence on the developer's credibility, track record, financial stability. See what other projects this developer has done in the past, so that you're sure of value, you're sure of quality, you're sure of timeliness to deliver. Another important thing is to engage lawyers. Have a legal practitioner, a real estate legal practitioner on your team to vet things like title, check if the land that the developer is building on has had previous court cases, because that's also important. So we're talking about the product now. We've talked about the developer. Now we're talking about the product, what you're going to buy. The land the developer is going to build on, does it have the approved plans? You don't want to invest in a project that the government is going to come and demolish in 6 months or shut down the site for another 10 months. That's not a smart investment move. So you want to make sure that the building plans, for example, are intact, approved. You want to make sure that the land has title perfected. You want to also make sure that there are no court cases on the land. Make sure that the land is free from any form of encumbrance. Lastly is due diligence on yourself. You're the investor. And since you're going to be spreading payments, you want to look at your cash flow. Am I able to come up with the financial meet up with the financial obligations as agreed with the developer? It could be monthly, quarterly, half yearly, right? So you want to be sure that you can meet your own financial obligations. There's so many scenarios and cases where investors have subscribed to off-plan projects, paid their initial payment 10, 20, 30%, and then they run into problems midway and they can't complete the project. And then there's the refund scenario or back and forth with the developer. You don't want to get into such instances. You want to make sure that you have the money to run the project for the time of the project in terms of payment. So do your due diligence on the developer, do your due diligence on the land and the product, the property, and do some due diligence on yourself as well, so that you're sure that you can also meet up to your obligations. So that will be all for our tips, strategies for real estate investment today. If I omitted anything, please call my attention to it in the comments below. Share your experience, and if you have any more questions about this strategy, let me know in the comments. Don't forget to like, subscribe, and share. Thank you.